Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and you're all invited to visit the Bookmap Discord Trader Lab community. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades that are available to everyone in the Bookmap Discord Trader Lab community, as well as a library of webinars on the process you see here every day. The idea of this stream is to help traders understand the business of trading. In other words, how the market works, why it does what it does, how at times you can get in alignment with it. And to understand this is not a business of confirmation or certainty, it is a business of complete uncertainty 100% of the time. Learning how to operate and maneuver, shall we say, psychologically in an environment of 100% uncertainty is very difficult for us as humans. It is not natural to us to operate in that environment, so our nature is to seek certainty and confirmation, and many retail traders naturally seek that as an answer to overcoming their emotional state and primal wiring. However, the business of trading does not operate that way. Most retail traders are seeking something that is not natural to this environment. The environment that we're in is very similar to gaming. In other words, how casinos work, in the sense that casinos only play games that have a structured or vetted edge that favors them. They don't control a lot of the elements like the cards coming out of the deck or how gamblers play the cards, but they do control how they play the game. So they only play games that have an edge that favors them, even though they can't predict the outcome of the next hand. Now, on the other side of that are us. And what we are trying to do is do something that doesn't work in this environment. That is predict and create confirmation. Is that logical? Well, if we can understand the business we're attempting to be in, maybe what we need to do is design a potential solution that is based on statistics that actually is designed for this environment, as opposed to try to fit this environment into a box that suits our comfort. So if you want to become uncomfortable, decide then if you want a career in trading. We are continually uncomfortable, but the thing about it is to understand where the discomfort comes from, where the fear is generated from, and how to manage it so you can actually operate in this environment. The casinos seem to have figured it out and do really good at it. Maybe we can just take the business of trading and overlay it on a successful business model. And this is why I have agreed to do the Trader Lab and to help traders understand the business of trading. And I also have shared 60 PDFs of structured trades to help traders put together a structured trade plan. The business of trading is not making it up. It's not a video game. Now, I'm not saying you can't do that, but I am going to suggest that if you're going to do that, you either play a video game at home, or if you're going to do it in the casino, be sure to get the cocktails and the ticket to the buffet. This stream's about the business of trading. Welcome to the Trader Lab, and there's a link in the bottom of YouTube if you're interested in visiting Trader Lab. It's a terrific community of like-minded traders that have come together to leverage their collective experience. And it doesn't matter what process you're using or what you do, that's all fine. What does matter is, can you move your career development forward if you're not getting the results you want, or even if you get results. We all have winning trades, by the way, because you don't need any process to have a winning trade. What you do need, in my opinion, is the ability to have an edge, so that even though we all have random outcomes like winning trades, we need to differentiate between what is just random and what actually has an edge. Do you know the difference? Or are you like me many years ago in Trader Groundhog Day, having winning trades, trying to make it better so I could have more winning trades, and every time I thought I had found it, it was elusive. It would disappear. So I spent years trying to fix something, and I didn't understand I was in the gaming business. I thought I was trying to predict and create certainty. Well, I call that Trader Groundhog Day. I did a specific webinar on that, and you're all invited to Bookmap Discord Trader Lab community. There's no cost. There's a link in the bottom of YouTube. Just come over and say hi. Okay, let's get going. Grab your pen and a piece of paper. I'm going to try to move as quickly as I can. And again, welcome to Trader Lab. Let's go. I got to take care of a little bit of business, right? General disclosure. All Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is based on structured trades that are available to everyone, and you have to vet them for yourself. In addition, this is not a trade calling room. I'm just saying that if we get into real time, we'll talk. But the idea of Trader Lab is to help you build out a business that aligns with your psychology or time frame. Time is not an element for what I do. It does have a place, but time frame is really not where we operate as day traders. Yeah, you'll see what I mean as we get going. Also, I'm streaming from Costa Rica. If the stream drops out, if you're in YouTube or Discord, it will recycle and I'll come back. It might take 4 to 5 minutes before another link pops up. If you're in YouTube, please be patient. The monkeys swing from the vine or the cable or whatever they do down here, but infrastructure is not the strong point down here in this little town in Costa Rica on the beach. So let's get going, and please take some notes. And remember, all of this and a lot more is available in the Bookmap Discord Trader Lab community. Let's go. Now, this is a higher time frame chart. And remember, this stream's available exclusively to Bookmap Discord Trader Lab participants to review, reverse engineer, screenshot, and the rest of it. This is how the market works. Again, this is what's called auction market theory. What is this auction market theory thing? Well, first of all, it's really market mechanics. Our indicators are all great. You know, we all use them because we're looking at Google Translate. But what is an indicator? It's a reflection of market or price-based behavior. Well, what creates the change in price? It's the participants. So the auction is based on the participant behavior, not on a lagging, potentially conflicting indicator. And I'm not saying you can't use them, but I'm saying is most retail traders are doing the same thing, and most retail traders don't have a good outcome. Doesn't mean you won't. I'm saying most don't. So what do they do? What might we do? Maybe we should do something different. So this is Friday, I hope. Yes. Got to make sure. So this is the close of Friday. Let's look at what happened. I can't show you everything on here, but this is a big consolidation. Now, down here, around 74-ish, 74, 75, was a target for this day. Notice where the low of the day is. And that came from over here. This is the auction. This yellow line represents the high volume. And trading is like shopping, I like to say, because really, what is the market? Why do we even have a market? Well, it's trying to figure out what's too high, what's too low, and what's a fair price. That's why we get rotations, and it happens in all time frames or fractals. Now, for me, time frame is this, because there's an open and a close. It's an RTH candle. Once we're outside of the RTH, in other words, the intraday developing time frame, then there's no time. There's only rotations. So it's a bit considered nuanced. So a lot of us go, well, RTH, that's a daily time frame, a weekly time frame. Then we have the 60-minute, the 30, the 15, the 5, the 2, and the whatever, right? Those aren't time frames, in my opinion. Those are fractals. And the difference between a time frame and a fractal is that time's rigid, it's based on the clock, and fractal is fluid based on the participant behavior. So you'll see what I mean. And this is not to be picky, it's to keep things fluid in the sense of what they actually represent. Again, just my interpretation. So what do we know on Friday? 59.1775 is the retail price from this day. This was too low, the low of the day. This is the highest volume for that day right there. On Thursday, we test this price, the retail price. It's too low. We close back up here. Now I'm in Thursday. But what do we know? We open on Friday lower and test 1775 from here. If this is too low on Wednesday and we get our short squeeze, what might happen? Well, we either might continue higher, right? Or we come out the bottom and now the price that was too low becomes too high. This is the auction. So then what's below us? This price, which was too low. So we had too low, too low. Well, now too high. What's next? See you later. Hasta la vista. Friday. Are you guys tracking? So now what do we know? What do we know? 58.64 is the retail price from Friday. 58.71 now is too high. Let's come a little further. 58.14.25 is the retail price from this day over here, all the way back in October. Interesting, isn't it? And this price right here is around 58.30.50. I hope you're making notes. I hope you're writing this down. Now, I'm going to take you one step deeper. Please give a like if you're in YouTube. By the way, don't forget if I drop out, it's the monkeys, it's not me, and I will come back. And remember, this stream's available exclusively to Bookmap Discord Trader Lab participants. And if you have a question, please post them. And please give a thumb up, hit the like. It helps the stream. So this is as of the close Friday. Now I'm going to try to do something here and hopefully not make big trouble. I am making some trouble, I think. Let's see. I posted this at 8:07 a.m. in the Bookmap Discord Trader Lab. I think I did. I'm trying to remember why I did it. Don't remember. Let's notice 58.35 has liquidity. Let's notice this is called a low volume node. It's sitting out here. Just remember these levels. And right here, this is called the heat map. And these are all components inside of Bookmap, which you can learn in the Trader Lab and also the Bookmap server, on order flow. And how do you use this? The heat map is showing the resting liquidity sitting right there. You can see that. That's why that's, quote, heat map. And then we come up, and I'm going to show you some other phenomena. But this is phenomena. We want to remember 25. Now, are you guys with me? Let's keep rolling. Just saying. So here's that same shot, 25, and here's liquidity up here. Let's just watch the behavior now. 8:10 a.m. And this is all posted in the Trader Lab. Now let's come to the RTH Open. You guys got these levels, right? I know you do. RTH Open, watch the behavior. We have here, we have behavior, we have the ETH volume point of control, highest retail price. Remember the price I pointed out at 58.14? That's it. Naked volume point of control. I hope I didn't close this other chart. So many charts, so little time. And where's the 58.14? Right there. Don't forget that price, 58.14.25. This is Trader Lab. You already know this. Now, of course, what you don't know is how, if, whatever, when. That's what structured trades are for. This is what the Trader Lab is built on. Knowing what you will do, where you might do it, subject to how it unfolds. That's called context. So based on what I just showed you, what do we know? The market broke out of a consolidation. What do we know? The market fell out on Friday. What do we know? We gapped, opened lower outside of yesterday's range. What do we know? We'll get continuation sellers at the open. What do we know? The possibility exists those shorts are going to get squeezed. That's what we know. So then what can we do? Question mark. We can initially take a short, suspecting the squeeze. We can take the long, participating in the squeeze. We can then take a short, subject to our plan, once the squeeze is done, to get the rotation down. Then what can we do? Wear a helmet and follow our trade plan. That's the Trader Lab. Let's see what happens. Please give a thumb up in YouTube. Let's go. Helmets on. Now, RTH Open. Let's look at the first trades. Now, remember the levels, right? I think it was 25. So many things to do, so little time. This is the RTH Open. This is called developing volume point of control. Now, these processes I'm sharing with you, you can learn, but you need to come to the Trader Lab community and you got to put some time in. like invest in your education. This is an advanced education process. This is not plug and play with an ATM in the basement. Let's get over it. Sorry to disappoint you. You can spend the rest of your life trying to curve fit yourself into profit, and what you'll do, in my opinion, is curve fit yourself into randomness and winning trades with no edge, which means over time, potentially, you go out of business. If casinos ran their business that way, we wouldn't have any casinos. We'd have a bunch of rich gamblers, but no casinos. Instead, we have casinos and losing gamblers. Which side of the table might you want to sit on? And of course, past performance is not indicative of results, but if you're waking up a trader Groundhog Day, you need to come to Trader Lab and just see what other traders who are just like you and me are doing that might be different than what you're doing now. And of course, if you have a successful process other than occasional winning trades like anybody can have, come to Trader Lab and share it with us. When I sat on the trade desk, we had a magic 8-ball. That did as well as anybody else did. The only problem was you'd ask a question, should I get long or short? It would say, ask again. Do you ever have a magic 8-ball? So this is developing volume point of control. This is where the high volume is, and it migrates as the volume comes in. This is basically shopping. So what we're looking for here is who takes control. Now remember, this is a target down below. This is the retail price in the ETH, and we open a gap outside of the micro composite. So that suggests potentially continuation selling and then a potential squeeze. So let's look. So market opens. I'm looking at this and I'm saying, I got a location here for potential selling, and I have a location here as a potential target. That's what I know. And because of these locations, I am waiting or subject to my plan, I'm doing whatever my plan tells me to do. So let's watch. So what do we have here? Now remember what I showed you, 25, and I think it was 30, I can't remember. So what is this? Liquidity in the book. Where's the location? There. Is this a coincidence? How about I say yes? And how about I say maybe? A lot of things happen in trading. Is this a coincidence? Now let's look over here. Now I'm going to just touch on some of these elements. You can see a lot more detail in the Trader Lab, but this is order flow now. So I'm going to take a bunch of pieces, you might say, and start layering them in. Remember, what do we know? Market broke out of a intermediate time frame consolidation. Everybody got short. Well, not everybody. There are shorts in the market, and we're going to get continuation selling on the open. What does that look like? There. And then what happens to them? Maybe they get squeezed. Where might that happen? If this price is too low, right here, and my liquidity comes in, what might that set up? Well, right here, I have passive buying, I have iceberg buying, and I don't know. So what am I going to do? If this is too high, this is a potential short to there. Now, I saw this, and I go, that's not my trade. Why? It's too close. So I look at it and I go, well, that's nice. So I open here and I go up and I go down. And I'm sitting here with my, like a deer in the headlights, like we all do, because I know what can happen. And unfortunately, I learned, or I should say, fortunately, that I can't predict anything. So I just know the possibilities I can't predict. So if you're looking to predict something, wrong business. How about the business might be what might happen, and then can you get an alignment on a timely basis where you have an edge? Do you know where it is? If you don't, come to Trader Lab. That's the whole point. So this is retail from the ETH. That's where the high volume is. And if it's too high, we reject it. This is the retail price from the last time we were down here, which was October. If it's too low, we reject it. See the symmetry? See the behavior. So let's watch. Too high, too low. Now what? What do we anticipate? Remember, top of the stream. Follow through selling, potential short squeeze. This, if there was more range, would be a structured trade from here to here. I have no range. I have no trade. Doesn't mean you can't trade it. I don't know. For me, I just go, no, let's see. Watch. See this two-sided trade? So I'm sitting here and I'm going, which side? Except I know that we're getting sellers in this leg, and the possibility is to come out the top. This is the top end here for me. So if I'm looking at shorts, I'm looking up here. My problem for me is I touched this already. This would be a target. So nothing for me to do. I'm just here hanging out. And remember 25. Let's not forget 25. Remember 25. 25. That's a short, advanced. It's called mean reversion. Where did it come from? Now, you're going to look at this and you're going to go, what is he talking about? I don't know. He's out of his mind. Yes, he is, except he's not, because this is market mechanics. Why did this happen at 8 a.m. Central Time? What is material about this? This is what's material. Outside edge. This is called the low volume node. All it is these are what consolidations look like. Rotations, consolidations. Well, if I break below a consolidation and then I come back to the outside edge of this and I see liquidity in the book, this is the heat map, remember, 8 a.m. in the morning, is it material to me that maybe I might want to be looking back at 25? That's why I showed it to you at the top of the stream. Isn't this interesting? Isn't this interesting? So why would I be looking at 25? Because of what happened there before. Right here. Now let me take you down into this. And again, this is somewhat advanced. This is not necessarily your trade or anybody's, but I do this in the Trader Lab. I don't call trades. You don't need to take my stops. I take them too. Don't think that isn't part of trading. It's called cost of production and overhead. But if I know 25 is an important level, and I know there were sellers there, and the market got rejected off it, if I come up to 25 and I see absorption, what is absorption? Absorption is the passive side. I got liquidity up here. Who knows? I see absorption here. I see selling icebergs. And for all I know right here, nothing's going to happen. Because I don't know. Remember, I don't know. Micro high volume is here. 25, no clue. This is a chop, and all I'm seeing here is a consolidation. What's over here? Consolidation. What is it? Break high. What does it say? Support. Going to the moon. Break high. Where's my volume? It's here. Looking for it to continue. What to do? Breaks low. Now, where's my support? It's right there. Let's see what it does. Breaks low. Something changed, didn't it? Breaking high, breaking high, breaking high, breaking high, breaking, don't know, breaking high. Here's the volume. Break low. Here's the volume. Watch. Far as I know, going to the moon. What is this? Watch. What is that? What is that? That is a Trader Lab structured short if it's part of your plan. And there's the actual entry. This is a trigger in the Trader Lab, and you're going here. This is called mean reversion. Let's watch. Notice the level. Notice where this comes from. Where is it coming from? What does this say? In Trader Lab, I don't use any indicators. I'm not saying you can't. I don't, because they're lagging, conflicting, and if you don't need them, why would you use them? Instead, what I found over time, and not easily, believe me, was that if this is a language, and of course we use indicators to translate language, right? Google Translate. What about if you learn to speak a language? And instead of waiting for something to tell you what it said and you're way behind the 8-ball, maybe if you understood what this says and you're using order flow, you now know that there was a buyer here and the sellers are being absorbed down here. Passive buyers, aggressive buyers, seller there, there's absorption, sellers are here. Buyer is sitting here, seller is there. As far as I know, the buyers are here, the buyers are here. These guys are absorbed. I'm just mentioning order flow. And we're going to the moon, right? Passive sellers are here, passive sellers are there. I don't know. But what happens here? I'm under this buyer. I got my seller here. And what is going on right here? My volume, my micro high volume structure is right there. You can see it. This is shopping. This is your store down the street. And this is called the auction. What is the auction? What's too high? What's too low? What's retail? If you go to the store and the price is too high, you're going to run out of buyers. The volume dries up. And there's always somebody who will pay something. You know, I know Saturday night, if I need a pint of ice cream for the movie and I go down the street, I'm going to pay more. And there's not going to be a line out the door for the ice cream, but somebody like me might pay for it. Then, if the price is on sale, I might buy two, maybe, you know, and this is the fair price. What happens if the shoppers determine this fair or high volume price, where most of the buying and selling takes place in this auction, is too high? They leave the store. Now they come back to the store and they go, nah, I'm not paying that. This is the auction, guys. And then I break away. Now they come back to the store again. You got to be kidding. How much do you want me to pay for that pint of ice cream? I'm going to go back to my supermarket where the high volume is for the day in the fractal or higher time frame as you think of them. So the short is here. If it's in your plan, the scale is here, and then you're holding. Watch. Now, this is just a trade. It's nothing more than that. It doesn't mean anything. And where, again, was it too low? You do remember this, right? So in the Trader Lab, this could be, if it's part of your plan, a short from this area, stop above the high, coming right back to this liquidity right there, and this is your target. Now, there's more. Let's watch. If you have questions, please post them. This is structured trading in the Trader Lab. So this right here is your retail price in the developing time frame. If this is support, this is resistance. If this breaks here and this migrates down and I don't get above this, I can potentially go lower. I'm now below this and I'm going, let's see where our target might be, the ETH low. This would be our next target on this trade. If it comes above here and here, the trade is over. Why? This says too high. This is called the variable high volume node. I'm going to label it. And I made these things up. There's a lot more available in Trader Lab and in the library of webinars that are in the Trader Lab. It's available to all you guys if you're inclined, and there's, of course, no cost. So this is the variable high volume node. So what does this say? Let's look at language. The variable high volume node is my way of saying this was the retail price. This yellow line represents the highest volume for the day in the developing daily time frame. And if it's too high, the volume and the price can move lower. This is suggesting potentially lower, right? Okay, but what happens if I cross above it? If I cross above it, then the shorts in this leg, which we are on, could become squeezed. That's all I know. I don't know anything else. So if you have trade management process, you'd be out of the trade. And to me, there's nothing wrong with this. You get risk neutral, you get some burgers, you manage the trade. And subject to your individual trade plan and the fractal or quote time frame, remember, I don't use time in developing quote daily time frame because there's no clock. The clock is not material to the time it takes for this behavior. This behavior right here is something I can work with and is not based on time. It's based on auction. Too high, too low, breakaway, retail. I'm not paying that. Same story, different location. Are you guys tracking? How are we doing in YouTube? Are you guys with me? Please give a like, give a thumb up, subscribe to the channel. Now, we come across the range. Where did we test again? Where'd that come from? At the top of the stream. Now what? Now what? Let's take a look. What's up here 58.31. And we have a gap, don't we? You do remember the gap. Yesterday's low. So what might be reasonable? Remember, market goes up to go down, the market goes down to go up. So is the market short? If the market's short and this is a target, I have the possibility, subject to my plan, of taking a long here, or because I'm looking for the squeeze. This is a Trader Lab trade plan. And then you're looking for this. You're looking for the overnight mid, and you're looking to fill the gap. Yesterday's low. This is the trade. Let's look. And you don't have to be doing any of this. You can be hanging out. Let's look at some more trades. Let's look right here. What is this? This is a mean reversion trade. And what this sets up, now, this is where conflict comes in, because everybody designs their own trade plan, and by that means the fractal or quote time frame you operate in. There's traders in Trader Lab that are only going to get long down here and wait for the gap fill, and they'll ride this out. It's like being at the rodeo. There's other traders that are going to be taking the long or not taking the long. Let's just say they take the long and they get this, they're going to exit the trade because this sets up a short counter rotation, and they might be trading back to here. We come back up here. Here's the high volume node. Let's just look at this. And the reason I'm showing you these trades is different traders operate at different time frames and different structures. So this sets up a return down here, right here. This is a test of these sellers here. If you can't get back here, then you're going to squeeze. So some traders are going to take the long for the gap fill. Other traders are going to take a short here to come back here. Other traders are going to buy the mid if they have a structured trade or not. There's all these possibilities. Now, the interesting thing about Trader Lab, I'm not there to tell you what's right for you, because I don't know what's right for you. It's got to kind of fit your psychology, whatever you do. So if I come across, and remember, the market goes up to go down, but the market goes down to go up. So we're trading rotations. I mean, that's what day trading is. We're trading rotations. This is the gap. So if you took the long all the way down in here, you'd just be riding through this. Welcome to the rodeo. And you'd be going for that. That's a nice trade. Now, this might not be part of your plan, so you wouldn't be taking this trade. You might just take this trade to come back to the mid, and that trade would be done. You'd scale there. You'd be going for this and down below. If that trade doesn't do its thing, you'd bring the register anyway, and you'd be taken out. That's possible, right? So now what? Let's go a little further. Now, there's a lot of other trade opportunities, but what I do here in the stream, I'm really only giving you the broad strokes, because when you start out in Trader Lab, if you determine you want to become part of this community, this is an advanced trading program. There is no cost for it. And I'm not a vendor. There's no course. It is the leverage of all the traders doing the work collectively to create something better. And I think you can get a lot of mileage out of that if you come and participate in a community that's oriented towards the business. Let's look at what's going on here. Now, this is sweeps and absorption. When you get buy sweeps, what I often look for is rotation. So this is a buy sweep, so I'm looking for counter rotations. But nothing is mechanical in trading. Wouldn't it be nice that it's all formulaic, like, this line crosses over this, and then you go down the basement at the end of the day and you make your withdrawal from your ATM. I know. What a fantasy, huh? It's not the way it works, in my opinion. There's your sweep. There's your liquidity. Now, I post all of these behaviors as they're developing, when I can, in Trader Lab to provoke thought. And my question to you in the Trader Lab would be, what does that mean? Now, what does it mean? Is it a short? Is it nothing more than observational? What is it? What does it mean? So I'm looking at sweeps and I'm looking for a counter rotation. I come up to liquidity, which is right there, the heat map, and I see absorption. That's absorption. So there's limit sellers there. I see buy stops. This is a stop and iceberg detector, and I see selling icebergs. Right here, I get a break. I get my buy sweep. What does a buy sweep suggest? Well, subject to your trade plan, your study, and your understanding of market mechanics, all of which can be learned with a high-tier tool like Bookmap, because we are focused here at the moment where the rubber meets the road. This suggests counter rotation, not a recommendation. What does this suggest? Counter rotation. Where's my potential resistance? It's potentially over there. Let's see what it does. I don't know what it's going to do. Now, that's not necessarily a trade, but it's a behavior. And now, coming down here, I have a sweep coming the other way. What does that suggest? Potentially counter rotation. So I have buy sweeps suggesting counter rotation. And I have this, absorption and liquidity. Now I'm looking a little bit more at algorithmic behavior. This is what we call a sidebar. You know, when the lawyer comes up to the bench, has a little conversation with the judge. So we're just having a little side conversation here. Liquidity, order flow, pressure. Look at the algos on the other side. Pulling. Advanced, very advanced. Sweep. What does this suggest? Counter rotation. Let's just watch. Where to? Fill the gap. Isn't this interesting? So what do we know over here? We took this out. Looking for the counter rotation. There's the counter rotation. What are we looking for over here? The counter rotation. Where's our target? Here. What's your time frame? You see, subject to your time frame. You know, I don't like the word because this isn't happening based on the clock. I mean, we're not punching a clock in a factory. It's happening because of this being too low. And if this is too low, then we're going to try to figure out what's too high. If the market is short, then we're looking for the squeeze. If the market squeezes, then we're looking to get short. We want to be doing the opposite of what most retail traders are doing. Then we got to try to figure out where. That's what structured trading is all about. So let's look at the 45. Let's just keep an eye on it. And we have another structured trade here. I forgot all about it. It is right here. I think I post a lot of this. Sorry, I was reading the chat. I'm not sure. 58.45. Yeah, Boomer. Good luck with that. Boomer's power's going in and out. Sounds like you're down here in Costa Rica with me, except ours goes in and out for no reason, as well as the internet. This is resistance. There's an old saying, resistance becomes support. But look at my sweeps. I have selling here, little bounce, I break above. So now this is like a support level. I have buy sweep here. I'm looking for the counter rotation. Support here. Now, what else do I have? I have filled the gap, and this is a structured trade. Let me bring you back to it. Kind of slipping here. This, at 9:30, we have something called the IB, initial balance. And at 9:30, is this correct? Oh, yeah, here it is. I'm sorry. This is the high at 9:30. And you have to vet everything, of course, for yourself, all these structured trades, everything I share here in the stream. But there is over a 97% probability past performance, not indicative results, will take out either the first hour's high or low. That's the first hour's high. And considering, what did we do? Let's come back. What did we do? Follow me. If that's too low, which is our target coming down, which I showed you at the top of the stream, and remember, if you're in Trader Lab, you can review these streams, circles, arrows, and all that kind of nice stuff, so you can understand how the market works, why it does what it does, and how at times you get in alignment. This is the business, not predicting. It's understanding. Do you understand? This is not a business of indicators. It's a business of valuation and price discovery. You got to differentiate what this thing is about, because you might be trying to solve for something that cannot be solved for. So if this is too low, where are the stops? Well, inside yesterday's range. Where might we go? Back here. And at 9:30, if I have the high of the first hour up here, and I have over a 90% probability to go there, might you be thinking about getting long for a statistic? And then if we break out of it and come back in, it sets up another trade. So here's what we have. We have a potential, if this is in your trade plan, and I'm going to show you one other little thing, if I can find it there. Remember, variable high volume node, it's marked right there. And I have one more I must mark, which I didn't. You know, when I'm narrating and streaming and trying to share all this stuff with you, I'm not a great multitasker, so I'm kind of, going to miss some things, or like labeling this. So it's just a label. What does it say? Let's talk the language of the market. It says right here in the developing time frame, 8:30 RTH open was there. This is too low. Why? I left it. What about over here, the next one, right there? There, too low. I left it. If I come back and check it, guess what? If you're a shopper and now we find a price that's too low, and it's still too low, and we come back as a shopper, and now the sellers will not sell us our S&Ps down. Instead, we check a level. Remember, this is all based on levels and the auction. Might we want to get long for a statistic that has over 90% probability? Is this making sense? This is Trader Lab. This is about probabilities, not predictability. No prediction. Casinos can't predict the outcome of the next hand. What makes you think you can predict the outcome of the next trade? If you can, come to Trader Lab. So what do we know? We know in the developing time frame, RTH, this is too low. We also know this was too low, and we know in the ETH that was the fair price. We know our target below was this from back in October. This is called confluence. And again, no prediction. So when we come down, so this is an exit or a short. I still haven't gotten there yet, don't forget. So at 9, this is the high. Fill the gap, come back here. Possibilities are, and we haven't gotten over this yet. So if I come down, now there's possibilities. I could sell this, come back here, thinking we might fall out the bottom, or I get this and it's a target and I see the absorption and a trigger, I can get long. Let's just see what happens here. And all of these are structured trades. Now here's the interesting thing about this. You don't have to take any of them. You can take one of them. Your trade plan can say, well, I want to be on the short side because the trend is down. Counter rotations I use to cover my short, and use these rotations up to get back in alignment. Or you don't care about that and you're going to trade the rotations from either side, both sides, or no sides. This is all Trader Lab process. It's all up to you. So let's look here. Remember, real estate, you've heard of this term, location, 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 and what happened below? Location, location. This is the first hour low. Remember, over 90% probability. Now, right here, you don't know. I don't. So if I took a short, I know I have over 90% probability to take out the first hour's high or low. Wouldn't you like to know which one? I don't. I don't worry about it. But I do, if I'm short, looking for the bottom to come out, then I'm managing my trade. That's all I can do with this. I can't do anything else. Why? I can't predict anything. So I don't worry about predicting. I don't even worry about being right, because if the casinos can't do it, then why am I going to try to do it? I'm not even thinking about it. I'm thinking about statistical edge, waiting for the trades. It's like waiting for a bus, and not gambling. Retail traders make it up and they're playing a video game. And we all understand that, right? Do we want to do what they do, or might we want to do something else? So let's watch. If this is too low, there's a change in behavior. Now, if I'm hanging out short, looking for this to get taken out, that is okay. If I have this location, I'm looking at it, it's a suspect, and I have no clue. Right here, I get this behavior. That gives me what we call the proverbial clue. Uh-oh, look at the change. Now, subject to my plan, right here, I might have a trailing stop here. Here's chop, 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 consolidation, break low, too high, micro high volume, too high. You see this little node? This is a shopping experience. This is too high. Break, chest, too high. I'm not paying that. Let's go back to the little store down the street. What about here? There's the volume. There's the volume. Break. I'm not paying that. Break. I'm not paying this. Break. Microstructure. Too high. Break. Going to zero, Lewis. Break high. Uh-oh. Change. See it? That's trade management. Now, you got to vet everything for yourself. Who knows? And again, I see this. Now, here's the thing. We're looking for a break of either the first hour high or low. Good luck with that, right? Who knows? It happens at 9:30 Central Time. Remember, by the way, I'm in Costa Rica. The stream goes down. It'll take me about 5 minutes. A link will come back in YouTube. Please hit the like if you're in YouTube. Have a question, post them. And remember, there's 60 PDFs of these structured trades you can download. They're available. Use the link in the bottom of YouTube and a library of webinars. There's all kinds of stuff here. You could really knock yourself out. And these, again, are just broad strokes of things. These are about 5 years old. A lot of traders were saying, what are you doing? And I've been trading going on 45 years. So I have some experience both professionally and otherwise. And you might benefit from some of that. So we're looking for the first hour high low. Let's watch. Now, high probability after 9:30, we take out either the first hour's high or low. You could have been aiming for the bottom. Nothing wrong with that. Trade management, you get taken out and you go, gee, that was nice. Now, what do we know up here? If we're going to squeeze across the range, we still have over 90% probability to take out either the first hour's high low. We can take them both out. Who knows? Who cares? Doesn't matter. Can't predict it, so let's watch. Take out this. Okay, into the range. Well, but what's the trend, you ask? Well, isn't it down? Well, if we squeeze out the shorts in this leg, and now I come across the range, now I'm going to be looking for a short. So I take this out. If I didn't get long, since I'm not clairvoyant, maybe I didn't, maybe I did. And if you're not clairvoyant, welcome to trading. None of us are. So we know, for example, let's say you were short going for the statistic on the bottom. You get taken out of your trade. You don't have a long. Where's your next trade? Up here. And what would it be? It's either the IB continuation trade, which for me doesn't qualify because the trend is down, then it's going to be shorts. So my next trade is a short. And I believe we discussed this in the Trader Lab. And let's look here. Resting liquidity, 45. Let's start watching. What happens here? Selling. IB highs right here. Initial balance high. 90% probability. Break high right here. And I see a buy sweep. What does that suggest? Counter rotation coming. This is all Trader Lab process. Support. Watch. Now, we're looking for a mean reversion trade. And I always joke mean because where's the outside edge? And it is a return to here. So this is the trade. Let's look at it. And this is a structured trade. It's called the IBF. It's in those 60 PDFs I just showed you. And they're available to all of you in the Trader Lab community. So, support, sweep. What does this tell me? Buy sweep. It's suggesting that I am looking for lower. So I'm looking for a short. Where's my short? I don't have one yet. Do you? No. And I'm looking for this so I can break and come here. This is a trade. So let's watch. A structured trade. And the thing about having a trade plan is you know where your trades are, you stalk them, and you wait for them because you've defined everything and your preparation is all done and the research is all done outside of this, outside of here. You bring your plan here. You don't predict. You can't. What you do is you bring your game. You heard this thing, bring your game. Well, we're bringing our game. So here's high volume. Let's look. This suggests counter rotation. This is support. Watch. This shows me absorption. Microstructure is here. I have no idea. Do you? Nope. Maybe you do. Come to Trader Lab. Help me out because I can't predict anything. I've given up the term prediction for alignment. So right here is micro high volume. Now, again, no idea because, support is here. This is telling me to look for a rotation. There's a rotation. This is my support. This will come back in a moment. It's taking a rest. Resistance. There's my absorption. Notice what's happening here. Passive sellers, icebergs, passive sellers, and I don't know. Micro high volume. What's going on here? Let me just give this thing a little bump. I want this to come back. Resistance. Too soon to tell. Where's my next high volume developing? Watch. It's right there. I'm going to mark it. So I have micro high volume. And what is the high volume, by the way? It's an auction. This is my IB high. So I have two possibilities. Continuation long, but not for me. I'm only thinking shorts at the moment because this is the squeeze. All this sets up a potential short, just don't know where. So this is like, what's going on? Watch. There's the break. Now watch. So here's the break. Break low right here against this volume, against this right here. All of this is a potential short right here. This is a short. This is the target. It's called mean reversion. The trade is named the IBF. And the idea of this trade is to come here primarily. So the short, and this is a structured trade, you can, participate in this. It's from here to there, primary, and then lower to wherever. The wherever is the, I don't know. Do you know? Let me know if you know. Now, right here, I'm getting a sweep. I know there's going to be stops at the mid and the VWAP. I also know this is balance. Balance is the retail price, and because the VPOC, highest volume so far for the day, is here, retail, if I find too high, the nature of the market has come back to the retail price, which is this. And then the nature of the market, and again, nature doesn't mean what it will do, it's what it might do, is to come out to the other side to try to find what's too low. And of course, we don't know, so let's use a trade management process. And where else might we anticipate behavior? Here's my sweep. I'm now going to begin to anticipate a counter rotation because of the sweep. And I don't know anything after that. I truly don't. And my job is, since I can't know, it's not to know, but to manage my trade. Let's watch. You guys with me? So, subject to your plan, let's look at this. This is VPOC migration. This right here is a variable high volume node. Now let's look at it. Let's discuss the language of the market. No indicators, but you're going to say, well, in a way I have indicators. They're just not the out of the can stuff that retail traders use. I always like to ask this question. And I never used to ask this question before, but I think this kind of is going to sum it up in many ways. This is the question, and I'm going to challenge you for the answer. If I can. Maybe I can, maybe I can't. Let me see if I can do this. No, maybe not. This is Investor RT. It's a higher time frame software package I use. These are the indicators. I'm just going to show you something. I always like some of these. Empirical mode decomposition. What is that? FinRC, arcs, extensions, projections, retracements, time zones, Fisher transformation index, fishy turbo. There's something fishy about that. Hakanashi, I always thought that was pretty cool. Jurek indicators, they were a big deal back in the day. Linear regression, summation, MACDs, math lines, money flow, momentum, etc. I'm not going to waste our time, but are you wasting yours is the question. Parabolic pivots, point and figure, price box, random walk, yeah. Okay, regression, linear slopes, sample RTA, slope lines, waves, stochastics. I shared an office with George Lane. He created stochastics. I went down that merry path for many years, actually. Volatility, price style, Williams, percent R. Larry Williams. Woody's CCI. Remember, come out. Anyway, do you get the point? So we spend our lives looking for the right indicator mix and time frame. Here's the question for this astute audience of developing or seasoned traders. Why do you need all those indicators and why were they created? If we just had the right three, why did they keep making indicators? Have you ever thought about why? Why? Answer the question for yourself. I already know the answer. Why? So are you going to keep going down the merry path of let me find the right indicator, right time frame? Or is there a message in the bottle? I know. Same thought that I had. Right time frame, right mix of indicators. That's all I got to spend my life doing. Meanwhile, the clock is ticking. Meanwhile, you get random success with any mix of indicators and time frames. It's all the same. It just smells different, looks different. We get excited, and then we get depressed. That's called Trader Groundhog Day. Is that you? You don't have to admit it, and maybe it's not, but it was me. And I did it on trading systems because I thought I could do it better if I had code and it was automated. Yeah, I did it much better. It's called curve fitting on steroids. So here's my support. Anyway, let's go on. I need to make that point because if you don't understand why a market comes to a level and why it reacts, you're always going to be looking for some indicator to tell you why. The why, in my opinion, is the auction. And the goal of the market is not to take your money. The goal of the market is to price, discover what's too high, what's too low, what's retail, and it does it in all fractals and time frames. That's actually what's going on here. Not everybody looking, you're not a victim here. You are a victim of your own preparation and only playing games that have an edge. If you're interacting in random locations where you don't have a statistical edge, you're not the victim. You're the gambler. And then the gamblers, of course, aren't the ones who keep the dollars over a random distribution of outcomes in the casinos. Why would you think that your outcome would be any different? I'm just asking. I know. Right indicators, right mix, right time frames, full moon, whatever. Speaking of the full moon, there are software packages that are specifically astrologically based. Did you know that? Think about how desperate retail traders get. They'll buy anything, pay anything. And anyway, I'm just saying. Have you done that? Are you still doing it? I'm going to suggest the answer lies within. It's not outside. It's within you and getting an understanding of what business you're actually in. You're not in the business of predicting, and you're not going to find the Holy Grail on some webinar somewhere, and not even this one. You're going to find the answers in the Trader Lab, and you're going to roll your sleeves up if you want to be in this business. You're going to get to work. and you're going to be in a community of other traders who are also on the same path because they've walked in your shoes, they've walked in my shoes. And we've all done the same thing. So you're not unique. The thing that separates what we do in Trader Lab from other traders is that we've all done this already, and we've learned from our experience that expecting a different outcome with a defective process that has random success is the catch-22 in this business. That's what we've all learned at different times. And to change our behavior is going to require something different because you already believe something that might not be true in this environment. Just remember, ancient mariners thought the earth was flat, and if they sailed to the horizon, they'd fall off the earth. They believed it. So for them, it was true. They didn't do it. It was their truth. Eventually, explorers went beyond the edge of the earth, and they didn't fall off. It was called a horizon, remember? You've all read this, you all know this. But what creates a belief, and why did the other ancient mariners not sail to the horizon? Because of their belief. Might you say that was a defective belief, and they kept on doing it by not going towards the horizon? Well, I find that's very much the way we operate in any endeavor. We have beliefs, and we defend and hold those beliefs because we haven't found something different, so we assume it's true. Is it possible what you believe to be true is not true in this environment? It's the question for this astute audience of developing traders. And I'm going to suggest you take a deep look within and ask yourself, is it possible that you have a dysfunctional belief that is not aligned with the environment that we operate in? That is the question for you. So what happens up here at 45? Let's watch. Our sellers are here, and our stops are going to be above the IB. Again, let's just see. So sellers are here, IB is here, yesterday's range is here. So what do we do with this? Let's come back to the down here. Variable high volume node. This is called mean reversion. So what it is outside to the mean, outside to the mean, outside to the mean. This is what we're in, two-sided trade. Everybody gets abused, so you don't feel left out. Let's talk about what we know. And this is from the top of the stream. Too low, too high. Yes, this is the open retail price. This is the settlement. What can we do in this thing? We can rotate. Where might we go? Well, we might come up here. We might stop here. And I don't, by the way, when I say where might we go, that's the best I have is where might it go. Do you have anything better than that? Oh, Fibonacci expansion point. Oh, yeah, okay. Maybe I can predict what's going to happen. That gives me so much more comfort. But God, you know, that stuff works sometimes. So does that Elliott wave. That works pretty good too, sometimes. What happens if you remove all of that, all of it, and all you do is you're right here, right now, and you're looking at the order flow, and you're looking at the auction, and you know we have yesterday's range, Friday's range. You know there's shorts in the market from yesterday, Friday, I should say, and you know that we have sellers and we held a key level. This is the current market. Is it possible that if this was support, which comes from November, and it's the current low of the day, which you saw, and this is the gap fill, and we can possibly come up here because it's the retail price from Friday, too low, possibly too high, or we won't, and we'll just squeeze out the shorts, come up into here someplace, and then rotate. So I know in my trade plan, short to there, never have to take another trade. Long out of there, back to here, squeeze the shorts. rotational trade. It's called mean reversion and whatever. This is the trade plan you might develop, and it has to fit you, your psychology, and you need to develop a statistical edge with it. By the way, if we get under here, what's below here, you ask? 03, outside edge of a higher time frame distribution. I use the term time frame, and then down here and here. So what's on the hit parade? This is another consolidation. We're under this retail price from this day. We broke out of this consolidation here. Thanks for playing. We'll send you a parting gift. We gap lower, squeeze the late shorts. We got shorts in this leg. We can abuse them a little bit. And then subject to, we get under here, go in there. Not a recommendation. This is the auction. If you understand the auction, it doesn't mean anything other than at times you will anticipate in order to participate. This is what's going on in the Trader Lab. And yeah, it's not going to be what you're used to, and it is different. And the goal of being in the Trader Lab is not to do what other retail traders do. And the reason for that is very simple. The failure rate for typical retail trader is horrendous. And I'm going to ask you, why do you think that is? Because they're all doing pretty much the same thing, curve fitting, trying to get their indicators to translate. The idea of the Trader Lab is to help you learn the language of the market and to not be dependent on something that has nothing to do, really, with the condition of the market. It just follows the market around. And then our nature is more indicators create more certainty, and then there's more time frames. And that's human nature. It is driven by our need to avoid the saber-toothed tiger. That's our primal wiring. It works great if you're on the savannah with the saber-toothed tiger. It does not work in this business, from my experience. Might work for you, of course. Doesn't seem to work for others. If that's your experience, you should become in the Trader Lab. You learn about all this stuff. Hope that makes some sense. Please give a thumb up if you're visiting in YouTube. It helps the stream. And remember, now this, of course, right here. Let's watch this. Sellers were here. We have sellers and absorption going on here. This is not a short. It is an area to observe. And what else do we know? If we can come into the range and get up in here, then we have this as a target. Write this down, 58.62-ish, 63. ETH high. It is possible. What have we not done? The ETH low. You ask me because you follow our stream, and I know, and I appreciate you visiting us, and all these statistics are available in Trader Lab. There's no cost. What is the probability of taking out either the ETH high or low? How about almost 92% probability? So here's the question for this astute group of traders. Is it going to be this, since we already tested that, or is it going to be this, which is open, and the settlement, and we're going to get this? Over 90% probability we get that or that. Which one? Question mark. Here's the answer. No idea. Here's the next part. Doesn't matter. What matters? Trading the auction, structured trades. This is too high. This is my liquidity. There's my sellers. This is a potential short off this high volume back here, called mean reversion. It's not a trade recommendation. If you're in the Trader Lab, you'd be taking, well, if it fits your plan and you have an edge, this is a short. Why might you take a short here? Because we are not getting into yesterday's range. We had our IBF, mean reversion. We have the VPOC, the mid, and the VWAP in alignment. We're not trending. We are rotating. This is a specific trade plan in the Trader Lab. It's called mean reversion. Mean, and sometimes the joke in Trader Lab is, yeah, it's mean also. How do you pick an outside edge? Very hard. How can we do it in the Trader Lab? Because we have structured trades, and up here, right here, we know what happened. The market said, I'm not paying that, and it left the store. Where was it? Up here, too high. What happens when I come back here? Absorption, icebergs, 478. What's happening here? Too high, break. Too high, break. These are all shorts in the Trader Lab. And where are we going? Here. Does your trade plan suggest that possibility? I'm asking. Why am I asking? Because you're in Trader Lab. I'm not saying you would take this trade unless you knew when it's qualified. Can you define the condition of the market? And then do you have specific trades that are qualified in this condition? And then do you have a trigger? Do you know where your stop goes? And can you get risk neutral before taking a stop? And the probability of getting risk neutral, and that requires a minimum 2-lot configuration, you know the answers. You don't know the outcome. If you know the answers, does that give you better control over your fear, your emotional state, your primal wiring, which is to run from danger? We don't run towards danger. We're wired to go the other way. I don't think you're going to run into a burning building unless, of course, you've made that choice for a career and you manage your fear. But most of us are responding to primal wiring, which is the certainty to avoid the fear, right? The bite of the saber-toothed tiger. Well, in trading, we have to overcome that fear, and we have to act when there's the most uncertainty, because then we get good trade location. When you look for certainty, you might be getting short here. Well, in Trader Lab, your job is to be getting short here. And a stop is out here, and you're looking to get risk neutral. So if the market comes back and takes you out, the worst that happens is you scratch your trade and your broker sends you a gift basket. Where if you sold it here for certainty, your stop is going to be in the same place. What does that do for your risk reward if you're trying to go here? See? So in Trader Lab, we don't use backwards looking indicators that are delayed and conflicted. We use structure of the market because the language of the market tells us what the participants are doing at any specific time and place. Then the outcome is still random. But where might you have an advantage? Might it be getting short here or there? If you got short here, you would be risk neutral. And if it comes back over this level, you would take a stop and your broker sends you a gift basket and maybe a dozen roses. If you got short here, look at your risk and here's what's your reward for that risk. It doesn't fit. This is Trader Lab structured trading. It's just an example of one trade. And with those 60 PDFs in the library of webinars that's available to all of you, I think you might be able to ferret out some things that you can reverse engineer and one step at a time build out a trade plan. This is a business, not a video game. I'm not saying you can't play a video game, but I think there's better games than this one. But the idea of Trader Lab is to be in a community of traders who are looking to develop trade plans and to only interact with the other participants when they have a statistical edge. It's what the casinos do. They're not making their games up. They don't change their game if they pay a gambler. They just deal the next hand in blackjack the same way. What do? Think of the emotional responses. I take a stop on a trade. Next trade shows up. Do I skip it? Do I change my behavior? I'm going to trail my stop closer this time. I don't want to take a stop. Do I move my stop away because I don't want to lose? Do you think that's how professional traders trade? Is that how you're trading? Because now you're trading your emotions. You're not in business. You're just gambling. I'm asking you the question because we've all walked in those shoes. And it's not an indictment of what we do. It's what everybody does. So that's what everybody does. And most traders, as you know, are just passing through. They're visiting. And they're going to say, no, you can't make money doing this. Nobody makes money. I'm going to say, in my opinion, and your mileage may vary, nobody who does what other traders do should expect a different outcome. You should learn from your experience, get a yield. You all invest time, dollars, whether it's trading equity or running the gamut of chat rooms and educators and gurus and everybody natural, normal, okay? But what have you gotten from it? And are you just going to do the same process, or is it like a bolt of lightning? Like, wait a minute, I'm doing the same process, Trader Groundhog Day, but I'm waking up in the same place. Do I keep doing it, expecting a different outcome, or can I get a yield out of what I've done because I'm repeating the class? I'm taking the same class over and over and over again. I'm using different inputs, but I'm getting the same outcome. That's Trader Groundhog Day. Is that happening for you? I'm just saying, I'm asking because that's where the light bulb might go off for you, and then you might want to visit Trader Lab. You might want to see what other traders are doing. Our senior trader has over 50 years trading. I have 45, both professionally and otherwise, sitting out here with you. I think you can learn a lot. The Trader Lab's a community of traders. We support each other. There's too much to do, too much work to do. And the way we all get better is to continually get better together. That's why the Trader Lab exists. And currently there's no cost for it. I cannot say how long the Trader Lab or my participation in it is going to last. I am a full-time trader, but I don't think anybody should go through what I went through if they choose to avoid it. Trading is difficult, and that's because it's random. If you understand you're in a 100% random environment, not a predictive one, then you're going to get off the treadmill of trying to be right and trying to look for confirmation. Then you may change how you approach this to something called probabilities, which is what the casinos have done, and it seems to work really well for them. So align yourself with a successful business model, which is gaming. Then the games are, quote, structured trades. And when those games are played, we know that we have a statistical edge and we play them exactly the same way. When you're in a random environment, something needs to be anchored. In fact, in the library of webinars in the Bookmap Discord Trader Lab community, my primer webinar, and it's about an hour long, has over 30,000, maybe 31,000 views. It will give you a high-level overview of what you're seeing right here. Why? Do you understand why? Because most of us don't know why. We just go, I don't know. Maybe, I don't know. And it's always sit down and let's play this video game. And maybe there's, it's like going and sitting down at, what do they call those things? Slot machines. Except here we're not putting quarters or dollars in the slot. We're putting a couple $100 a crack in the slot. And if you don't have an edge, why would you do that? Unless it's for entertainment. But Trader Lab's not to entertain you. It's actually going to require that you take responsibility and roll your sleeves up and get to work. I will challenge you. You will become uncomfortable. You're going to be uncomfortable because you're going to have to change how you think. Because when you believe something, it's very hard to let go of your beliefs. I mean, for me, I'm doing this 45 years, and I went from classical bar charting. There were no technical indicators when I started trading. I did my charts by hand, and technical indicators were just coming into where we had access to them. And there were no computers, there were no internet. So I'm just giving you a sense of it. I thought the Holy Grail showed up because the line would cross over, and, oscillators. Wow. So I went from that and believed I was doing the right thing. And I started with indicators, right? And then more and more indicators. And I went down the path you guys go down with indicators and time frames, right? And then systems. And I believed I was doing the right thing because even the papers being published at the time talked about trading systems. So I built trading systems too. So I was doing everything I thought was the right thing to do, but I still had problems, but I thought that's just part of what I was doing. The problems were it was continually breaking down. So it was an optimization schedule. You're probably doing something like that, either with systems or most likely just indicators, screwdriver out, tweak, tune, curve fit, right? Optimization, it was called. We've all done it. The thing is, good chance that you're still doing it. Well, we've all walked there. We've all been there. So the point is, you're probably going down the same road we've all been down. So, and that's what most retail traders do. Now, it doesn't mean it's not going to work for you. I can't say that. I can say most of us have done that. It doesn't work. So what might work? Well, it doesn't mean you can't use your indicators. Think about this. Suppose the market is not made up of indicators. It's made up of behavior. Suppose you could learn the behavior of the market, why it goes up, why it goes down, why the market gets offsides and it needs to rotate over itself. An understanding of price discovery and market mechanics. That's all in the Trader Lab. Then suppose if you understood those pieces as primary inputs, but then you can use an indicator, a canned indicator, to support those processes that are based on market mechanics and structure, you see, versus the other way around. I always like to say, is the dog wagging the tail or is the tail wagging the dog? Indicators are the tail of the dog. They're the output. They're not the input. If you understand the input, which is this, you might be able to then read it and potentially have alignment. The outside edge is up here. It's going to be stops. We now have a weak high right there. There's stops here. So we would anticipate that we might come out the top. And if we do, then we still have our resistance out here. This is a potential short to here. We don't get there, then your trade management would take you out. That's okay. It truly is. Now we still want to watch up in this area right there. That's an outside edge. It's created right here is resistance. If we pop right here and we don't get above this high volume, we can still come back in. Or, and watch this right here, we have a sweep. Now we want to watch this behavior, not a trade recommendation. We're going to watch. Now there's something else you got to remember. Remember, there's two pieces. We have settlement and we have this level up here, which we have about, I think, a 70% probability. Let me look. Past performance not indicative of future results. I'm sorry, 30% probability. So low probability. This is an area to potential fade for mean reversion, and I'm not giving you a trade recommendation. Everybody takes stops. It's called overhead and cost of production. Location, think real estate, sweep, order flow, liquidity. Looking for trigger. Let's see what it does. And this is still potentially mean reversion. This is not a trade. This is just we're tourists. So we're looking for a counter rotation, and this is where this trade might go, unless, of course, it fails. Let's watch it. This is Trader Lab, not a trade recommendation. I really want to reinforce that here, because just because there's a structure here doesn't mean it won't fail. Every trade is subject to failure. Everybody takes stops. But let's see if the auction gives us a hint. And order flow. It's right here. Micro high volume structure. Let's just look. I'm running out of time. Please give a thumb up in YouTube if you find this a curiosity. There's our micro structure. There's our sweep. There's our liquidity. There's our potential target, not recommendations. The goal of the trade, if it was one of your structured trades and that you vetted with statistical edge, is to look down the food chain, see where the last auction was, where the sellers got absorbed. There's my break high. Here's my resistance. Here's my break low. Here's my support. It's right in here. If I took a short, which, who knows, right? Where might I be going? If I took my short here, I would be looking initially to get risk neutral, and the stops are going to be under here, and support is in here. So potentially I'm looking here to get risk neutral, keep my stop up there, and then if this thing gets chugging here, or it's going to fail. Here's another sweep. We want to see the behavior around the sweep, and it suggests continued rotation down. Again, I'm always going to say it's not a recommendation. Remember, this is not a trade calling room. Everybody takes stops. You don't need to take mine. It's just a trade, and this stream is about retail trader behavior. And you can learn a lot about this if you're interested in the Bookmap Discard Trader Lab community. Please give the like, please give the thumb up, and let's watch the behavior on the retracement. This is a potential trade here, and we are in it, as they say, to win it. And if it takes this out, then the squeeze can continue, and we will see. This trade fails right over this line because it's a high volume node here. So this area is resistance. So we would like it to stay under here and especially under there. If it takes that out, then hasta la vista. Thanks for playing. Broker's going to send you a gift basket. Hope that makes sense. Hope you're getting something out of this. Remember, the stream's available exclusively to Bookmap Discard Trader Lab participants to reverse engineer, screenshot, and review. Hope you're getting something from this. Please hit the like, helps the stream. If you want to visit the Trader Lab community, there's no cost. Use the link in the bottom of YouTube. So then you can learn market mechanics, how the market works, why it does what it does, how at times with vetted structured trades you can get in alignment with it, and also join a community of serious traders. This is about the business of trading, not entertainment, though we do have some laughs from time to time. Let me show you the Trader Lab, just so you can get a sense of what it looks like. This is the Trader Lab community. There's a lot going on in here. Thank you, Stephen. A lot of posting. I do this. When you develop your trade plan, you need to understand market mechanics. You can't predict anything. Throw that out the window. It's a waste of time. What you need to do is anticipate the behavior, and then you're going to know potentially what trades might be qualified. The behavior is anticipated here. What happens? Clueless. 45, I mentioned above, is something you might want to observe. This is the 45 we're talking about for the IBF. Screenshot, and there's a lot going on here. You can see it. So you can see there's a lot of behavior and a lot of discussion here in the Trader Lab. There's also a library of webinars. I'll see if I can find that for you, maybe. This one is the primer that's got over 30,000, and then all of these trading gaps, trading high volatility reports, trapped in trader Groundhog Day. Is that you? Why most traders using indicators fail. Are you a trader or a gambler? VPOC migration, trading fractals, deep dive, advanced trading processes, auction market theory, understanding mental obstacles, and there's a lot more. So streams from 2022 will keep you busy. And some of these are up to 4 hours long of real-time narration. You can see this in real time. I don't have time now, anymore to stream like that length of time. But if you want to see an ongoing narration of trades, that's also available on Trader Lab. Please give the like and the thumb up. So what would happen on this trade that we're talking about here? This trade, you would either, if you took a short here, you'd be risk neutral, you get taken out. If you took a short over here, you would take a stop. Okay? That's the real world. Can't say anything more about it. And remember what our targets are. Next target is up here, and we have high probability. This is only a 30% probability, but this is over 90%. Think about that. And there's no way to predict. So if you took a stop, and this is the thing about trade location, you don't want to be selling in the hole using lagging indicators. You want to know where your trade would show up, which is here and potentially back in here, I think it was. So this one, not a lot of risk. You might take your stop. I think it was here. I can't remember. But it might have been here. Not a lot of risk. I take stops. You take stops. I like taking small stops when I can, or the trade doesn't qualify. Please give the thumb up. Come to the Bookmap Discard Trader Lab community. Use the link in the bottom of YouTube if you'd like to visit. There's no cost. Download the 60 PDFs of structured trades so you can reverse engineer them and access that library of webinars. Thanks for visiting the Trader Lab Remember, the stream's available exclusively to Bookmap Discord Trader Lab participants for screenshots, reverse engineer, and to develop your plan. Have a great day, everybody. Use the link in the bottom of YouTube if you want to visit Trader Lab. I look forward to meeting you there. And don't forget, please give a thumb up on the way out. Always appreciate you visiting the lab.